Hello everybody, welcome to another video here on my channel. This is the second episode of my Chart Annotations review. If you have not watched the first episode, I do highly recommend it because it's very similar to this one, which will be the rest of this week. So the way I sort of plan on doing this is each week is going to have 5 episodes, one for every single day of the week, Monday through Friday. And then the next week, I'm going to try to add a little bit more to try to, study a little bit more concepts, understand price better, and in return, hopefully this increases, my profitability and, gets a lot of other people to learn from. So, this was yesterday's action. Again, the day will always start, well, these markers right here represent 12 a.m. There we go. And then the daily opening is at 6 p.m. So you can sort of see right here, this candle right here is the daily opening, and that will create this green line right here that shows a D on it. So first thing to notice is that through London or through Asia session, which is right around here. I'll actually put on the indicator. So this is Asia session, which goes until 12 a.m. and then here's London session. You can see that they both traded below the opening price. So we can expect the end of the day to be bullish. Doesn't really mean that when the market opens, it will instantly be bullish. But usually, if we trade below the daily opening price, the end of the day will be bullish, or will end out above daily opening price. So now that I got that out of the way, once again, the indicators I'm using is Fair Value Gap by Nephew Sam, ICT macros, and daily opening price, weekly opening price, monthly, and yearly. So you can see we traded below here. I don't care to look at any of the action in here. I mean, you can. There's just like there's a bunch of setups later in the day, there's also a bunch of setups overnight. I don't look at those. So right here, this is 5:10 a.m. right around there, and you can see we have buy side liquidity up here, and we have buy side up here. So those hopefully get met. You can also see right here, we take out this buy side, and then after we take the buy side, we sell off, but then we have a massive green candle. Let me do this. We have this massive move up, so this can be manipulation because we manipulated this high. This is an internal manipulation after an external liquidity has been taken. So let's just see what happens here. After this, we're moving down. Notice these are slow candles down. And then we get some bigger candles down. So the standard deviation, it projects these. So this is the 2 to 2.5, which does line up with this liquidity and this 15-minute fair value gap. So that got hit right there. And then do a little small retrace. Doesn't quite tap 1 to 1.5. And also we are in discount of the range, so we could see a bullish move after this. But you just keep looking at price action. Right here, I'd be waiting to see a buy setup. Still nothing yet. We have fair value gaps here, but we could still go down to this level. So I would not really want to look for any buy models yet until, well, I wouldn't want to take a long until we have a good buy model. But then right here, we create this SMT. So this is showing that we're bearish. We also have this protected high. So this high should not get visited until this low gets taken. And you can see right here, after this SMT, you have this entry. If you want to, you could take this entry just because we hit 2 to 2.5. sort of retraced up, but we did make it SMT. This could just be the retrace to then head lower to this 3.5 to 4. So we create this SMT. Here's a good entry. First, you can target this low. But something you're going to notice here, which this SMT should be like this. So we created an SMT right here at the bottom. Now, if we create an SMT right here and we have a rejection off, I'd probably take a position out. If I was to be in a short position on this fair value gap, right, I put my stop at the top of this candle and put my TP down at here. This is realistically the trade I'd do. 1 to 4.78 RR. But if we create this SMT, that means that ES has taken this low. So the low is already taken on ES, which ES and NQ correlate, meaning NQ does not have to take this low for this model to be complete, right? Meaning it can still go back up to this protected high. And since we have an SMT here, that's showing bullish, so most likely this move could get reversed. So if I did see this candle right here, and then maybe even this candle right here, I would probably take myself out of the position. And I'd still profit at the least amount. I'd profit at a 2.56 RR. So retest this for value gap and we reject off. So now I want to see, is this going to get taken or is this going to get respected? If it does, I may enter a position. So it does. And we also do have these equal lows right here. So honestly, this would not be a bad trade since we do have these equal lows, especially when we have stacked equal lows, like 3 of them right here on NQ. These are usually going to get taken. So if you do see this fair value gap get respected again, especially because it was retested because it already got respected back here, that shows bearish. And then we obviously respected this fair value gap, so that's bearish. We're probably going to go and take out these lows. But here we just create more equal lows and we come back up. So honestly, let's just see what happens next. So we take out this protected high, and now that we took out this protected high, I'd probably want to either see, are we going to reject off this to head lower? Maybe we just wanted to take this protected high first, or are we going to retrace to premium and then go lower? So there we go. We're in a premium. That's the premium of this range. And as you can see with this 2.5, you can see we didn't really end here. We didn't reverse up here, but we don't have to, right? We didn't tap this yet. So here I would probably have no bias, but I would want to see bearish because we have this 15-minute, we have all these fair value gaps here. Plus we have all these equal lows. So let's see what happens here. Get this high created, strong rejection down. I'd want to see this fair value gap get respected. So it sort of does, right? Here's another one right here. Once I see this candle, once I see this get respected, this is where I would enter in for shorts. Do that, put your stop at the top of this wick. And we sell off, and my target would be these equal lows, which does get hit. And then another target would be this protected low, which also does get hit. Alright, so now let's see what happens next. We continue to sell off. And we hit this 1 minute. Why do I have TP here? Oh, hold on. Yeah, ignore all these annotations. I'm gonna, yeah, whatever. So we sold off. We rebalanced to this 1 minute. Came back down. We swept. We took in this low out. So now I want to see, are we going to get anything to the upside? So number one, we just had a sell off. We just took out a bunch of liquidity. Number two, we have an SMT. Number three, we're about to enter a macro. So this is a great chance to see some sort of reversal move. And this is where usually this is where the best kind of trades are, because you have all of these confluences aligning together. So right here, I'd want to see some sort of market structure shift. So right here, we take out this high. You can see this body closes above this high. So I would enter into this fair value gap. In this macro, I'd expect it to reverse us back to the upside. And I'd probably put my stop at the bottom of this candle, because this could act as an inverse fair value gap. Just like so. So I would probably enter right here. We went all the way down here. And here's the macro to reverse us. I take my first TP at this high, and then I'd probably take another TP at the 50% level, because that's 50% of this fractal. So let's see what happens next. We keep going higher. Oh yeah, that's another thing I forgot to mention. Once again, just like you saw earlier from up here, where we took out this external, and then we swept this external, and then we swept this internal as manipulation. Same thing happened right down here. We took out this external, right? Swept back up, and then we once again came down and manipulated these lows. So this right here would be your manipulation, and then these would be your targets. So 2.5, and then 3.5 to 4. So we hit, we're about to hit 2.5. We don't hit it just yet. Now we hit it, and right when we do, it looks like we come back down. We then create this this gap. Now, something to remember is that whenever we create a gap, for example, this gap was created on a down move, that's usually really bearish, because it's showing that there's a lot of sellers in here. So here's a liquidity gap. Let's see if we respect it. We actually, no, we don't hit it. So now out of this leg right here, we're in a discount, and we create an SMT. So now that this SMT is formed, this is your SMT TP, and this is your protected low. So again, price should not go below this low if we get an up move right here. So I do not want to see price go below this low, and I want to see this get taken out. And then there we go. We did it right there. Really no opportunity for an entry. Once again, you can see we created a gap here and a gap here, which also shows that we may take out this TP as well, because we're so bullish. There we go. We took that out, and we entered the 3.5 to 4 area. So now, want to see possible sell setup. So we're just buying. We just took out this SMT TP from this massive lower SMT. So now this move right here, this is a complete, models inside of models, but this is all just one big model, right? And then we have buy side right here. That also gets taken out. So since that buy side got taken out, that is this entire model complete. So now I would have no bias. You could either see higher, you could see lower. Most likely we'll see higher, because we've been under here all day. Now we're above daily open, so now I'd want to probably see higher for a while. Again, that's just to help us. That's not something to trade off of. So we hit this macro. As you can see, we're sort of consolidating, but it's a little more of a downtrend. The macro right here reverses it. And then here's a great entry. So you have this recent high. We go above this high. You could take an entry right here in this fair value gap. There's an entry. Yeah, there we go. Here's your 1 minute fair value gap. And then here would be your stop loss. And then here would be your TP. This would be your first TP. And then see if there's any sort of manipulation. I really don't see any manipulation. Let's say you were to take this as manipulation, which I don't really think it is, but no, I wouldn't call that manipulation. I'll just mark it out though to see what happens. Honestly, could be. So we tap to 2.5 here, come down, retrace to discount of this range, and then we go higher to this 3.5 to 4. If that's manipulation, I don't think that's manipulation though. Just because we took out these lows, but we didn't take out any more lows, and like, I don't know, it's just really not that clear. But you can see, once again, the macro reversed the move, just like it did right here and right here. Actually, right here it didn't really. I mean, it sort of did, because we were in a downtrend, and then the macro hit. Same thing right here, uptrend, macro reversed it, gave us a retrace. And then right here, sort of retraced. This macro wanted to push it higher. Okay, we're right here, letting more structure form. Now we just had this liquidity sweep. So here's one thing I notice all of the time, which you're probably going to see in this episode again and probably other episodes. This is a very, very untalked about concept that I've noticed in my trading. And it's whenever you have two highs. So you have this high right here and this high. Now, this right here is a leg going down, right? This is a leg going down. This leg is considered a fractal. That's what every leg is. For example, this leg's a fractal, this leg's a fractal, this leg's a fractal, this leg's a fractal, right? But it's all in a bigger fractal. For example, this entire leg is a bigger fractal. So you have smaller fractals inside of a bigger fractal, right? And then looking more out, this is a fractal, this could be a fractal, this could be a consolidation fractal, here's a fractal, and it just keeps going higher and higher and higher and higher on bigger time frames. So, out of this fractal right here, this is considered an internal high, and this is an external high. Same thing as internal liquidity inside the fractal, just like this is internal liquidity, this is internal liquidity. This right here is internal liquidity, and this is external liquidity because this is the top of the fractal slash bottom of the fractal, right? This is the external liquidity of the fractal, and there's not really any internals, but these wicks would be internal liquidities. So right here, out of this fractal, you can see we swept internal right here, but we did not take out external. So here's the pattern that I've noticed. We come up, we sweep internal, instantly reject down. After we instantly reject down like this is super bearish because it's something that repeatedly happens. I don't fully know why it happens. I could not tell you, but I just know that it does happen, so we have to take advantage of that. Maybe in the future I'll figure it out, but right now I don't know. But I do know that it does sweep internal and leaves the external, and we get a displacement down. So now that we do this, we have this fair value gap created. I want to see us trade back into it. Right here, we trade back into it. I'd probably put my entry, since this is a big fair value gap, I'd put my entry at the bottom of here because this would be a breaker. This is the bodies of a low, and we enter into that. We hit consequent encroachment, which is 50% of this fair value gap. I'd put my stop at the top of this candle, and we'll see what happens here. We head lower. First TP would be at this low, which gets taken. We're also in discount now, but we'll see what happens here. So we're in discount, meaning a move higher could happen. So then we do get a move higher. And then, so we create this high here. We have equal lows right here. We have 3 equal lows here. 4 equal lows. So this is most likely definitely going to get taken very soon. We take this out. Now, as you can see right here, this is a sweep of these lows and then an SMT created, followed by a massive move back up. So this alone is extremely bullish. We also reacted off of a 1 hour fair value gap. And you can sort of think about it like this too. We have out of this leg right here, or if you thought of this as one big fractal, this could be external low. These could be internal lows of this, right? So you could think of it as sweeping internal, leaving external. So after this, I would want to look to take something into a fair value gap. You can also see this could be a TP right here. If you saw that we respected off of this and you entered right here, this could be a TP. If you look at if you're looking at this at a very small sort of model, you have your accumulation right here, and then you have your manipulation right here, and then your distribution, which is up here. This is your power of 3 model: accumulation, manipulation, distribution. So we take this out, sort of market structure shift here. We have this 1 minute. I want to find an entry into here. We come down and tap it. My stop loss would be at this low, and we'll see what happens here. Now we also, since this is a manipulation because we manipulated these lows to go higher, this would be the standard deviation, which does nicely align. 3.5 to 4 does align with this liquidity level, so that would be my target. I also marked manipulation right here. So this sort of adds confluence to this. We could possibly go up to here too. So right here we take out this high, and I also expect this high to get taken as well. So there we go. And then possibly to this 3.5 to 4. There we go. So now that's the end of this model right here. Now let's see what happens here. More structures forming. You can also see this macro right here. It was simply just a continuation macro because we did not do a market structure shift to the downside, right? If we had this low formed and then we came down, went below the low, retraced into a fair value gap, then I'd expect to see lower. But again, macros don't mean that you're going to 100% have the move reversed. It's only reversed if you have a market structure shift. So right here, we create an SMT. Here's your SMT TP. You can also mark consequent encroachment of this wick because it's a big wick. You also have this 1 minute. So you could enter in right here. This could be an entry. Now this is a very this is a very tight stop. This is only like 2 points. So most likely if you entered this, you probably could get stopped. We actually go all the way up here. I'd probably put my stop at the top of this wick. It'd be 11 points. Somewhere around there. So after that, we dump down, have fair value gap created. Are we going to respect it? No. So we're bullish. This high could get taken out because this protected high can't get taken out because this SMT TP got taken out. We also have a macro coming in, so we'll see what happens here. Macro hits. Are we going to have a reversal? I want to see this low get taken. Now that hasn't got taken, I want to see this low get taken. This low got taken, and this low got taken. So now I want to see us possibly retrace. Here it is. So this could be an entry right here. See what happens though. Doesn't really look like much happened. We just didn't respect it. I'd probably want to wait for the respect because macro doesn't just mean it's going to respect, like, it's not 100%. Macro is just help with it. We also have triple equal highs up here, so I want to see this get taken out. We're just consolidating a bunch right here. Now we got a massive displacement down, and we have all these equal highs. So we'll see, do we want to take out this low or not? I'd still be patient waiting. So we take out this low. It's a sweep. After this low is taken, then I'd want to see this protected high get taken. That just adds more confluence to this protected high getting taken. Also, we have tapped into all these fair value gaps right here. So right here, we have market structure shift up. We have fair value gap created. We'll see if it respects it. It's not respecting it yet. We come down, tap discount of this little range. So now I'm very, 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 very bullish. Maybe not that many varies, but just keep waiting here. Macro hits. Macro hits, you can see we are in a uptrend right here. Now this is a little tricky. So we're in an uptrend. We've also created an SMT. So this is a protected high, meaning we should not go up to this high. So I'd probably wait to see until, I'd probably wait. This protected high is not going to get taken yet. So we just keep watching. This low got taken out. So I could expect us to see lower. So there we go. We headed lower, took out this low, but now we create an SMT at this low. So most likely now we'll probably go higher, and this is a protected low. So now this is where I want to see, this is the best possible setup. As you can see, more structure was formed, way more confluences now. More than just this little sweep right here to take out this high. Now we have this sweep, we have more structure here, we have a retrace down to discount, a sweep of this low, an SMT, right? We have a protected high right here, SMT TP right here. This SMT TP should, I think, be up there. Oh wait, no, never mind, because that's at this range. Okay, so then I expect this protected high to not get taken. So now I expect this high to get taken. And then right there, the high gets taken. After the high's taken, now I'd sort of want to see, again, we're still in the macro. We've been in an uptrend. We can still reverse, right? It doesn't have to reverse at the beginning of the macro. This is all an uptrend. So we can still see a reversal here. Now that we've taken out these equal highs, now I'd like to see some sort of move down. So you can see we sweep this high, massive displacement down. We have a fair value gap created. I would look to enter in this fair value gap. Here's my entry. Here would be my stop at the top of this candle. And my target would be this protected low and this low right here. Right, those are the closest things to us. And we sell off beautifully to take these out. So just selling off even more. We end out also taking this protected low. So that would be a beautiful short setup right there. Right, we had a little internal model here to take out this protected high, and then out of this external model, this getting taken out, which could also look like AMD. We have accumulation all right here, manipulation up at this high, distribution down. We take out this liquidity. We're in a discount of this range, so I could see higher, but there's nothing yet that really shows me it wants to be higher. It was just a sweep of this low. So right here now, wait for more structure. So we create an SMT right here, have a little bit of displacement down. We also tapped into 1 minute while creating this SMT. That's very, very bearish. Here's an SMT TP. You could also possibly take an entry in this order block. So you have this right here. I would not personally take this because I like to take order blocks by their bodies. In this, did it hit its body? I don't think it did. Oh, it did. Okay, I would take this. Perfectly hit the body. I don't know if I'd get filled though, but there's a retrace to there. We sell off, take this SMTTP, we take this low. We also have this low down here that we took and out. Just more structure being generated. We have an SMT at these lows. NQ made lower lows while ES made higher lows. Displacement up, this is protected high. I probably would maybe take an entry in this fair value gap if it gets respected. Right here it gets respected. So then I'd look for my reaccumulation entry. Right here's a reaccumulation entry. It's basically the second fair value gap that gets tapped into. So first one's right here. So how this works, this is right here is a perfect example of a turtle soup setup, right? Very, very profitable, high win rate setup. You have an SMT, displacement up. So number one, I'm going to list out these confirmations, or these, just basically a list of confluences that show us that we'll have a reversal. So number one is SMT. This is step one. Number two is displacement. That's step two. Number three is a respect of this fair value gap that gets tapped into. That's step three. And then number four is obviously tapping into the second fair value gap. I would look to take an entry right when we just tap into this. And you could take a profit at this high. This is really the only high that has to get taken though, because that's what the high of this SMT move is. This is the SMT-TP. Most likely if I was in a position, I would trim out some contracts here, and then I put my stop to break even so I won't lose anything, and then I just get stopped out, but I'd still be in a little bit of profit. Right, that's just playing the game of probabilities. Okay, so right here, we are in an uptrend, right? We also have a 1 minute fair value gap right here that has been respected before. We tapped into it again, got a little bit of a shift down, took out this low. So the macro hasn't hit yet. So if you're feeling risky, you could take an entry in here, right? I probably would not because we have not entered the macro yet, but we'll see what happens here. It does get respected. We actually are still in it during the macro. So I probably would take it right here. When this candle opens, I probably would take it. Or when this candle closes. When this candle closes, I probably would take it. So I'm going to mark this out right here real quick. So here could be entry. Where is entry at? There it is. Entry. Stop loss would be at the top of this candle. And my TP, we got a low here. We have discount right here. We have this low here. As you can see, though, we create an SMT right here, meaning ES did take this low, meaning the move could be done. And we may see a reversal here. We also have this 5 minute that's gotten respected multiple times. We come up. We end up taking this high. And just waiting for more structure here. We create, not yet. Okay, once this happens, we create an SMT. This is very bearish. So I'd expect something lower. We have equal lows right here. Massive displacement down. Here's a fair value gap right here. An SMT TP would be, it would be down at this low right here. We sweep this low. We're in a little fair value gap right here, so let's see what happens. We go through the fair value gap. I'd be pretty bullish right here. See, we come up. We take out this protected high, and we have all these fair value gaps. And then we also, out of this range right here, we are in a premium. And it looks like this is just around the end of the day. So take out this protected high, premium, sort of selling off, but here I wouldn't trade. And and then it should just consolidate. This is where it just consolidates the rest of the day. Okay, so another thing I want to mention is that let me go back to the beginning of the day. Protected highs and lows are a very, very strong draw on liquidity. So we have this protected high, right? As you can see, doesn't get hit until this low is taken, which SMT does consider the low being taken. And then we come up to take the protected high. We come down, take this protected low. Now, externally, we have a protected low right here. And we also have a protected low right here. So keep in mind, we are bullish for the day because we've been trading below the daily open. That means that any buy side protected highs are very, very likely to get taken a little bit more than the sell side protected highs, right? We obviously want to target buy side liquidity if we're bullish because buy side liquidity is highs. So looking for any protected highs that get taken, if we are going to end the day bullish, most likely there will not be any protected highs that are left untouched. And that explains also why right here at the end of the day, oh wait, this is not the end of the day. But again, before we sell off to go lower, this protected high gets taken. You're going to see there's probably no protected highs that don't get taken. This one gets taken. This one gets taken. This one gets taken. Here we sell off. And then at the end of the day, we're coming down. This one ends up getting taken. And then this protected low also got taken. But again, right here, we had this protected low creating in the day. We had this protected low and this protected low. They have not got taken yet. And so this one got taken because it's at the end of the day. Well, it's also because we're bullish. And you can see right here, if we wait till 6 o'clock, okay. Right here, if you think about the daily candle, it starts here. You can see once again, we traded below this. We had a big move at the day, but where did we end off? We ended off above the daily high, or above the daily opening. That's sort of an example of time and price. So I believe that's all I have for this chart annotations review. I hope you all enjoyed. I hope you got a little bit out of it, and I'll see you all for episode 3.